This episode is presented by Mercury, the fintech that simplifies how more than 200,000 businesses operate. Hello and welcome back to Equity, TechCrunch's flagship podcast about the business of startups. I'm Rebecca Bellan, and this is our Wednesday episode, where we home in on a trend in the tech world and dive deep. Today, we're talking to Philippe Botteri, the Accel partner who's led the firm's investments in companies like DocuSign, UiPath, and more recently, Snyk and Chainalysis. Philippe, welcome to the show.
Thank you, Rebecca. My pleasure to be here.
I'm really excited to have you on the show to talk about all things Europe and AI and cloud and SaaS. You're based in London, is that correct? But you used to work at Bessemer?
Yeah, so I've been in Europe for the past 13 years now at Accel. Before moving back to London to join the firm, I spent a bit less than 10 years in the US, and a good part of that time was with Bessemer. I was in their Menlo Park office.
And so now you're focused on cloud, SaaS, security, enterprise IT. Has the conversations around these technologies shifted very, very much in the last decade or however many years, or has it kind of been similar conversations with different jargon?
So yeah, spending a lot of my time these days on cybersecurity and AI. Now, it has been incredible in the past 13 years to see how things have changed in Europe. I mean, when I moved to Europe in 2011, journalists were asking, like, when is Europe going to generate the first unicorn? Like at the time, the unicorn was not pinned, but it was like, when is Europe going to generate the first $1 billion outcome? That was the big question. In 2021, UiPath was the largest software IPO globally. And who would have said that the largest software IPO of 2021 would come from the company out of Bucharest, Romania? It tells you how far the European ecosystem has gone in the past 10 years. And from an investment standpoint, if you look at the venture capital going into software and cloud companies, in 2016, it was 1/10 of the equivalent in the US. And today we're 1/3. So it shows you proportionally how far Europe has grown as well.
And now your firm just recently came out with, it's called Euroscape report with a lovely image of AI eating software. I would love to just hear some of your high level thoughts about some of the findings of the report.
Sure. The reason why we call this report AI is eating software is because AI is really rewriting software, both figuratively and non-figuratively, right? We have models who can actually write software code. And if you look at what's happening in the software world, AI is basically driving the recovery of the ecosystem after kind of the decrease and the 2021 bubble. And that's true in the public markets. And if you look at the public market, just looking at the NASDAQ, in the past 12 months, there was like little more than 8 billion of value being created. And 5 billion of that 8 billion is coming from a set of 6 companies. And, I can name them, but you know where they are, right? The Facebook, Google, Meta, et cetera, and NVIDIA. So I don't say the Magnificent Seven because, I think Tesla is missing in action. Their performance the past year hasn't been as great, but the 6 companies have taken a lot of the value that's been created in the past year. And if you look now at the private market and the money going into private cloud companies, this year, we estimate it's around $80 billion, which is 65% growth versus 2020. The entire growth is coming from investments in AI. I mean, the amount that we're talking about for AI, the past couple of years, you're talking about 56 billion. So you can call it around 25 to 30 billion a year for the past couple of years. So huge investments. And I think it really highlights the potential of the technology in terms of productivity improvement and its ability to basically redefine the capabilities of software.
Yeah, I think actually TechCrunch had an article a couple of days ago from Kyle that investments in Gen AI startups it's close to 4 billion in the third quarter alone of 2024. But, the report mentions that there's growth slowing outside of AI. Do you see that as an opportunity or as a risk?
Well, I think what's happening in the AI world, everything is a bit of a frenzy right now. There's a lot of investments and growth. Now, if you look at the traditional software companies, then the picture is not as bright. And I think what we're seeing right now is the growth rates. We're following a public index of 100 or so public cloud companies. That index on average was growing at 47% at the beginning of 2021. Now it's moved from 47% to 15% in the past quarter. So it shows you that AI is really sucking the air out of the room, and it's quite hard for the traditional software companies to basically be able to grow. So obviously they're focused now more on profitability, and they're working hard to incorporate AI models into their software so that they can start to actually grow faster. So we'll have to see what happens in the next couple of years. But I think if I try to explain this, it's a combination of different factors. I mean, the one is there's been a lot of spend of big companies buying software in 2020, 2022, and now they're kind of digesting this spend. Two, there is kind of a rationalization, like a lot of things were bought and companies saying, well, maybe I don't need to have 5 different communication software and I can kind of unify on one. So there is also consolidation of spend on the big platform. There is AI, who is basically where we're seeing IT budgets are now being freed up to be invested in AI. And so obviously, even if they're growing 3-4%, but the investment in AI are growing much faster. It's like 30%. And so that means that the rest is actually decreasing. So that's putting more pressure on traditional software. And obviously you have the macro uncertainty that giving a pause to companies, so sales process are also slower. I think that's kind of what we see happening in the traditional software world.
Yeah. And then Europe obviously is very well known for its enterprise software, specifically more so than consumer. Does this mean Europe specifically is in trouble if all of the US AI foundational models end up eating enterprise apps?
Well, right now, the US has the advantage on AI. I mean, if you look at the amount of investment going there, if you have $10 invested in AI, 8 is going into the US, 2 is going into Europe. So yes, there is more money coming into AI in the US, but Europe has a lot going for it in terms of AI. Like if you look at the talent pool that we have in Europe, it's pretty strong talent pool. I mean, Yann LeCun opened Meta Fair in Paris in 2015, right? They opened it there because they know that there was a pretty strong pool of talent there. And France has very strong history in terms of middle fields and applied math, and that translates very well into machine learning and AI. Then you have DeepMind in the UK with a very strong talent pool. You look at Stable Diffusion, which is probably one of the most used algorithms to create images, and that was invented in a lab in Munich. So I think Europe has a very strong talent pool. I think it's fair to say that on the foundational model layer, they started a bit later. So you have some great companies like Mistral, like Edge, like Poolside, 11 Labs, but they're a bit behind. So in terms of their fundraising capabilities, they have raised hundreds of millions. They haven't raised like the billions that OpenAI or Anthropic have raised. But that is going to be the next step for Europe. And the question is,
what you think the next step is to get to, invest into European foundational models, to not rely on US models?
Well, I think there's a question of whether these companies will be able to raise billions of dollars.
Right.
Even if they don't, I think there is room for these companies to basically focus on more specialized models that can provide value. I mean, if you look at enterprise application in particular, 2 things are very important. One is the inference cost. 2 is the latency. So thinking that the biggest model with the highest latency and the higher inference costs are going to solve everything, I don't think it's going to happen. So I think there is room for this AI I would call challenger to actually create a lot of value. Now, I also think that some of them will actually end up raising a lot of capital and potentially change leagues and come into leagues of companies that are raising billions, which right now you have Anthropic, X, and OpenAI.
Right.
And then you have the next league, which are, the big companies, the Google.
Yeah, the public companies that spending hundreds of billions of dollars on their AI.
Tens of billions. A lot of it goes in infrastructure, though. And so the question is infrastructure going to be, are we getting to a point in the future where the best models will require tens of billions of investment, in which case, then it's going to be challenging for the others to catch up because, when you're worth 2 or 3 trillion, you can spend tens of billions. I think it's hard for anyone else. But I think we'll have to see, because I think as model get more efficient, you can train more powerful model without the same increase in compute capacity. So we'll have to see how that's going to play out.
Yeah, owning the infrastructure seems like it'll be very important. And, it seems like a lot of these companies are even just becoming asset companies at the end of the day. They have to own the infrastructure, they own the data centers. And at this point, it looks like they're owning a lot of the energy production as well, as we see companies like Microsoft invest in nuclear power and things like that.
Yeah, the 3 Mile Island deal where I think they purchased the production for the next 20 years or so. In the past couple of weeks, both Google and Amazon announced deal for SMR, so small nuclear reactor, to be able to power their data center. So clearly, there are strategic moves being made to secure that energy production.
Yeah. So how do startups, as you call them, the challengers, how do they even bother competing? I mean, I don't think Accel invested in this company, but correct me if I'm wrong, Aleph Alpha, which last month seems to have pivoted. They're a German company. They had raised over 500 million, and they were trying to do their own LLM and build their own foundational model. But I think just despite the fact that they raised 500 million, that just simply isn't enough funding necessarily, and it's difficult to attract investors, I think. So they pivoted to doing kind of AI support, and then they do still hope to develop their own advanced generative AI model separate from Silicon Valley. But yeah, I think, as you said, a lot of these companies are going to have to focus on smaller use cases if they were late to the foundational model race.
So for Alpha, we didn't invest in them. I think I'm not close enough to understand exactly why they did this pivot. But I mean, if I look at Mistral and H, they have plenty of capital. They are building their foundation model and they're not slowing down. So I think it's a bit too early to say that the race is over. I think we're just at the very early innings of this race. And I think it's just too early to call it at this point.
Yeah, it's just, if you do need those levels of funding, where does Europe turn to? Where do European challengers turn to?
I think it is a fair question, but if you look at where the money is coming from, and you have obviously private funds, and both, if you look at the investor in Mistral and H, I mean, it's a very international base. So I think on the venture side, I don't think that the US has an edge. I mean, the same funds are investing in Europe, and so there's access to the same capital pool. I think if you look at the big strategics, the Amazon and Google and Microsoft, I mean, they have made investments in different companies, and they're obviously in contact with the companies in Europe and would be happy to do it. So there is an option where the capital is coming from the traditional venture funding from the strategic. I think there is also an option where the funds are coming from the sovereign funds. I mean, we have seen a lot of interest, in the Middle East for AI. So, I mean, the money could come from there as well. If you look at the evolution of technology, I think what it has shown is that if there is an interesting opportunity, you'll find the capital. I think the key is to make sure that there are enough progress being made so people really see that there is a big opportunity for this company coming out of Europe. And then if there is, I don't think access to capital will be an issue. I think it will be an issue if people think that they cannot succeed.
Well, how do you change that mindset, I guess, or what strategies as a VC do you use to kind of promote your portfolio companies on the international stage and ensure they're getting access to those pools of capital?
Well, I think at the end of the day, it's the team and the product that speaks for themselves. So, I mean, if you look at the different model that Mistral have released, I mean, it didn't take very long for people to take a very strong interest in them because they were just very good and very performant. And so H has not released their models yet. I think probably going to come between now and the end of the year. And I think the companies will have to look at what they produce and whether they think it's exciting and whether they think it can basically start the agentic workflow revolution that people are waiting for.
Ah, yes. The agentic workflow revolution.
Anthropic released something today about the new agent that they launched. But I mean, H is not the only one working on it. I think Microsoft also, yeah. Also announced
Salesforce.
Things. So everybody, I think, is going into this direction. But right now, I think it's been more talking about it and announcing release that really providing tangible results. So I think it's going to take a few more months for that.
One thing I did want to mention, because you were talking earlier about the talent pools and how Europe has great talent. And that is one of Europe's strengths, I think, when it comes to not falling too far behind in this AI race. But then It's worth calling out that big tech has consolidated AI talent, using their billions to tens of billions of dollars. There's the character AI founder who went back to Google, I think. There's the Inflection Microsoft deal. There's the Adept Amazon. There's these reverse acqui-hires, if you want to call it that. How vulnerable are European startups to falling under the umbrella of these larger big tech giants?
Well, I mean, I think somehow if you go back to where you came from, is probably because something was not developing the way you were expecting to, right? So as long as companies are successful, there is no reason for them to go back in the fold to some extent, right? So all the people, like the great scientists who have started these companies in Europe, they all came from DeepMind and Meta, etc. So why would they go back there? So either, obviously if there's a lot of money at stake, etc. Like, who knows? Potentially they may do that. But I think if you look at them today, I think my sense is that they're really on a mission. And the reason why they left these big companies is because they saw that they could achieve what they wanted to achieve better in a different environment. And I think a lot of what we heard is like when you're part of big research organization, etc., you have less freedom to develop things, to ship things. And they basically decided to leave and create their own company so that they could go back to smaller environment where they can be a lot more productive and efficient and with less constraint around them. So right now they're on a mission and they want to succeed. And so if at some point something doesn't pan out the way they wanted, maybe they go back. But again, I think that's not the pattern that we're seeing now. So we'll have to see how things, and probably some will. Like, I think, it's a law of numbers. Some hopefully will be successful and standalone independent companies, and some will be acquired or some form of acqui-hire because of all the regulatory constraints.
Okay, and we can probably just keep talking about this, but we do need to cut to break. And when we come back, let's talk about the state of the exit market for European startups and generally. It's time banking did more than hold your money. Now it can. With Mercury, you can pay bills in seconds, close the books faster, and even send invoices. Not only does Mercury do away with a patchwork of tools, it eliminates guesswork, giving you complete and accurate visibility into your business finances, all from one account. Apply in minutes at mercury.com. I think that your report also did mention it had some data about M&A activity, the state of the exit market in Europe specifically. And I think M&A activity was expected to reach somewhere around 75.4 billion for 2024 because the IPO market is, continuing to stall. Can you talk a little bit more about any M&As that you're expecting to happen this year?
So the M&A numbers, the 75 billion is a global number. So I think it's what...
Oh, global. That's not just European.
No, it's not European. I think it's what we see on a global basis. And that's for M&A deals that are north of $500 million. So it's kind of telling you what's happening in the big exit landscape. If you look at what's happening this year, I think it's kind of in line with the past few years. And it's very driven by very big exit. We say this year is going to be 75 billion. And 35 billion of that is the acquisition of Ansys by Synopsys. Just one deal is half of the market, and that's the pattern that we have seen in the previous year with Splunk in 2023, which was a pretty big one as well. Now, if we look at what's happening in Europe, I think a lot of the names that we're seeing here are US names. So we have been probably a bit less of this large M&A happening in Europe recently. That said, I think there is a pretty large pool of late-stage software companies that are in the 200, 300, 400 million in revenue range coming out of Europe that just missed the IPO wave of 2021 and are now waiting for kind of the IPO market to reopen. And so my guess is that in the next 2 to 3 years, we'll start to see these companies getting to some form of exit, either through an IPO if the market reopens or strategic M&A. But the one thing on the M&A side as well is that the big tech are missing in action. The obvious reason for that is because of the regulatory scrutiny. It's very hard for them to make any large acquisition without, huge uncertainty, right? Every time they do something, it's being reviewed. And even if it goes through, that means for 12, 18 months, the company that's being acquired doesn't really know what's going to happen. And it's a very uncomfortable position to be running a company. And when you don't know if you're going to end up at, Google or Microsoft, or if, 18 months from now, you'll be a standalone company and kind of have to recover from that. So that makes actually the risk on both sides is pretty high. And that's why it's not happening. And I think that is obviously impacting the tech M&A market pretty importantly.
Well, it is and it isn't happening, right? It's not like happening in the obvious way, but it is happening in those kind of reverse acqui-hires. Like we'll just hire your whole team, right?
But that's very specific to. I think we're only seeing that with AI, where a few key talents in research are driving most of the value. I don't think you're going to see this kind of deal with more traditional software company because here basically was they wanted to hire back the researcher.
You're talking about Character.
Yeah, I think they were Character and a few of the others that happened, right?
Yeah, Inflection.
I think there was Character, Inflection, and Adept. So there were the three of them, Google, Microsoft, and Amazon. And it was kind of the same thing where we're not making a full acquisition. We're kind of taking some sort of licensing agreement, hiring back some of the key people. So very structured deal. But we think that is kind of a bit of a one-off, which is very driven by the dynamics of fundamental model design.
Mm-hmm. You mentioned also late stage funding in Europe. Now, I think that late stage is just difficult for a lot of companies at the moment, generally, as investors are perhaps a little more risk averse. And Europe kind of has a reputation for implementing austerity measures since 2008. But are we starting to see, we've covered a few articles like 20 VC closes a new $400 million fund to, quote, make Europe great again, or the Nordic entrepreneur-led VC firm Node VC closes 71 million euro in its first fund. We're starting to see more late-stage growth funds come to life. Are you seeing that? Does that pan out to you?
Well, I mean, I think the fact that we're seeing, capital flowing into European fund is because I think the venture community has realized that Europe was a very strong component of the venture ecosystem globally, and that great companies could emerge from the region. I think that's what's attracting the capital. We often hear, Europe or this country or that country is kind of missing late stage capital. I think in today's world where capital has really no boundaries and funds invest across region, I think that saying that one specific country is missing late stage capital, I think is totally missing the mark. I think what it says is that the late stage capital doesn't want to invest in some of these companies, which is different, right? Because not every company is investable for everyone. If companies have, very good growth rate, strong ambition, want to be global, they're going to have access to capital. So I don't see that really as a...
You don't think like the geography of it all can affect certain people? I mean, I'm just thinking about just you saying that made me think about New Zealand, where I used to live, and I did a bunch of coverage of the venture environment there. And Peter Beck, who's the CEO of Rocket Lab, said to me, there's no $100 million check in New Zealand, right? So you really have to, if you're a great global company, you'll find that money abroad. But, there's extra steps to be able to get that capital. I don't think Europe has the same problems as, a faraway island like New Zealand does. But
I think the question of capital is only based on expected return. So if you're addressing only a local market with a capped exit, it's going to be very hard to raise 100 million because people are not going to see the return on that.
Yeah.
But if you raise 100 million and you can create billions of dollars of value by addressing a global market, then you'll find it wherever you are, right? So it's more a question of what is the potential of the company and the scope and their willingness and ability to really go global or address a very large market more than the capacity of the venture market to put 100 million in a company.
Okay. And before we finish up for the day, do you have any predictions for, I want to say European AI?
For European AI, that's interesting. So I think that next year is going to be the year of the agentic revolution. And I think Europe will play a big part of it. I think we're all very optimistic about Age can produce. I mean, it's just a top research team. And they have been very focused specifically on that problem. So obviously looking forward to see what they can do. But I would say in general, next year is when we're going to see agents being able to interact with web application and basically start to really execute digital tasks for people and for companies. That's going to be super exciting. The other thing that I think is going to happen in the coming year is we're going to start to see a new way of developing code. Because as models are becoming more performant to generate code, I think we're going to move from code completion to application creation. And at that point, the scope of the coding will be to define the specs of the software. And basically developers will write specs and then the AI will write the application and then be able to maintain that application. I mean, that's a vision of a company called Accel, which is here in London. It's been founded by the founder of Snyk, the developer cybersecurity company. And that's exactly the problem that they're working on. And I think that's going to be very exciting to see how AI is really going to impact that world.
Wow. Okay. Can't wait to see if your predictions pan out. And I think that's it for us today. But where can our listeners connect with you online? Are you online? You on X? You on Threads? You on Mastodon?
Yeah, so people can find me on my social network. So I use a lot LinkedIn, which is usually where I put all the content. And I'm also on X.
Great. Well, thanks so much for joining us on the show. And to our listeners, you can find me on X at Rebecca Bellan and Threads at Rebecca Bellan_writes. And you can always find Equity on X and Threads at EquityPod. Talk to you Friday.
Thank you.
Equity is produced by Teresa Loconsolo with editing by Kel. Bryce Durbin is our illustrator, and we'd like to give a big thanks to our audience development team and Henry Pickavett, who manages TechCrunch audio products. Thanks so much for listening, and we'll talk to you next time.